Hi, everybody. I have a great session planned out for everyone. I just want to update on the dollar because we did get a pretty good reversal. If you recall, earlier in the week, I was looking for one more high in the Dixie because we did have confirmed highs up here at 94.5. So I was looking for one more high without a confirmation of momentum, which is what happened yesterday after the CPI. We had a pretty good reversal day. They got on it pretty good, and we're trying to dig our heels in a little bit. It is lower on the week, and my 2-week reversal, if we close Friday under this close of 94.07, it's a 2-week reversal. The most bearish thing it could do is continue to accelerate after bounces, take out last week's low for an outside week to the downside. And then, I'm not looking for this to be the dollar crash, but why can't we pull back towards 92 before attempting another advance to higher levels? And you know what? I'm just a technician, and I rely on guys like Marc Chandler to explain to me what I'm doing in the market, because I'm using candlesticks and technical analysis, and Marc really understands the nuts and bolts of FX and what really makes it move. Marc, welcome to TradeGate Hub. It's great to have you, and you're one of the best guys I know at explaining FX, so that people could understand too, not just for, Marc making sense was a great idea, because you do, and you don't have to be have a doctorate in economics to understand what you're talking about in the currencies. Welcome.
Thank you. It's really a pleasure, and I think you're right. I mean, that trading, especially when we're not doing it for other people's money but doing it with our own money, I think it requires everything we have, which is both the technicals, the price action, and the macro, the big picture.
Right. And Marc, we're moving into this, hasn't happened for a while, but I don't know if you could call it tightening by just not buying and adding more liquidity. And then the BOE came in, and they're talking hawkish, the Australians, New Zealand. So everyone seems there's a different tack than what people have been used to with endless QE. I'd like to ask you what you think the effect is going to be. Are the days of beggar thy neighbor over, where people are going to try for currency depreciation to get their economic engines going? What do you see ahead? Because this is new ground, and one other thing I'd like to ask is, if they start this and markets cave, will they reverse?
Yeah, isn't that fascinating? How we got hit with the pandemic. What was it? Last February, March period.
Yes.
Central banks responded very aggressively, and now with the combination of the vaccine, progress is being made, and you can see this in the huge amount of stimulus that was provided. Economies are growing. In fact, it's interesting what the IMF said earlier this week. They basically said that the U.S., Canada, and Japan will be bigger. The economies will be bigger in 2024 than they had forecast before the pandemic in 2019. Out of the G7 countries, the UK is at the bottom, and the sort of Germany, Italy, France are also going to be a little bit smaller, but not as small relative to what the IMF had thought. Than the
So
UK.
why the gains in the U.S. and not elsewhere, where similar central bank strategies have been executed?
Yeah, so I think there are a couple of reasons why. One is the U.S. economy just runs hotter, and so does the UK economy for all practical purposes. But I think that when I look at the amount of stimulus provided, I think that few countries could compare with the United States. I mean, remember, before we went into the pandemic, we had the Trump's tax cuts behind us as well, and so we had a large deficit going into it. And so why is the U.S. growing faster than most of its trading partners? I think it's because we provided more stimulus.
Okay.
And so I think that in some ways, on the unwinding of it, the Federal Reserve is not the first. We saw Norway hike rates last month. We've seen New Zealand hike rates. And of course, a lot of the emerging markets have begun raising interest rates. Just yesterday, Chile surprised the market, second month in a row, 125 basis points, one move. Brazil has had several hikes this year, and the last two were 100 basis points. So
Okay,
I think I'm sorry.
No, there is a difference, I'm curious about, because I don't follow the Chilean peso. I believe that's what it's called. Sometimes countries raise rates to protect their currency from outflows of the country. And it's not because the economy is coming back, it's because they want to support their currency with higher rates. Is that what's going on in emerging market economies, or are they starting to really grow again?
Yeah, so I think to your point, there are some countries that are raising rates partly because they have high inflation, but don't have really a strong economy, like Brazil and Mexico. But
Right.
Chile might be a little bit of an exception. Chile's economy grew low double digits in Q2. And so you got a combination of all this past stimulus. And you know what they're allowing people to do in Chile is tap into their pension funds, which frees up. I mean, sort of like eating the corn seed. They're able to borrow from their pension funds to fuel current consumption. But in general, I think that what's happening is that, and I think this is really the story here in the United States too, partly it's inflation, partly it is strong growth, and partly it's the idea that we're no longer in this dire emergency where last March and April, it looked like they would end the days.
Yes.
I mean, even the treasury market was disrupted. So does it make sense, given the strength of the economy, given the price pressure, that the Federal Reserve is still pumping in $120 billion a month in QE, that is the amount of bonds it's buying. And not only is it buying bonds, but it's also buying inflation-linked bonds. These are these inflation-protected securities that Treasury issues. And then the Federal Reserve cites the TIPS market, the inflation-protected market, or the break-even, the difference between the conventional bond and those TIPS, and then cites that differential, the break-even, as some kind of confirmation of their views, when they're, like, to me, a butcher with his thumb on the scale.
Okay. Mark, with this going on, I would have expected maybe larger ranges in currencies. And, I'm looking at the euro right now, and, it trades every few seconds. Some of these currencies, you have to make an appointment to get a trade off. Do you expect volatility and increase average trading ranges down the road as this new regime unfolds? Or have they squeezed out all the volatility and there's almost some type of cooperation between central banks so that we don't have wild swings?
Yeah, Dale, I'm old enough to remember when on the floor of the Chicago Mercantile Exchange, where they trade those currency futures, they used to have a blackboard, a chalkboard, that you go put your price and bid and offer on. Those days are long gone. And that's one of the things that really excite me about the currency market.
I ran orders. I probably handed you a ticket, Mark, and you were interested in the ticket that had STP at the end of it. So you could cover your longs or shorts into the stops. But I remember those chalkboards. Bill Hickey, remember all those traders back there? I used to run orders for Dean Witter when it was a chalkboard.
And that's what I really like about the foreign exchange market. It's the biggest of the capital markets. Average daily turnover, something in excess of like $6.2 trillion a day. What that means, today is Thursday, what that means is we've seen enough foreign exchange turnover this week already to cover world trade for a year, which is why methodologically, I tend not to focus on goods, but like the trading of goods the way maybe we used to 20 or 30 years ago. Instead, focus on those factors like rising interest rates that can have an impact on capital flows. That's really where my focus tends to be, much more on capital flows. But of course, when it comes to, say, the Canadian dollar, I know a lot of people see it as a petrocurrency, see high oil prices, and they see a stronger Canadian dollar. And maybe sometimes people look at the same thing with Australia. But for the most part, I think that the capital flows are still bigger for both of these countries than their trade flows. Small emerging market countries like Chile and Peru, okay, I get it that they're not really a diversified economy. Commodities play a bigger role. But I'm looking at the things that drive capital. And I think that the strength of the U.S. economy, the booming stock market, the profitability of U.S. corporations, and you see this now, in the last couple of days, we've been getting the bank earnings. And it seems to me that they're really going to blow away their earnings in, say, European banks. And so
Okay.
I think that's what attracts people to the U.S., the depth and breadth of its capital markets, more so than the fact that it has a big trade deficit.
Okay, so with all this strength, and I noticed I went to your website, Mark, and your commentary after yesterday's number was dollar sells off, but the sell-off's getting a little stretched. I would induce with what you're talking about, and it's you have economic patriotism for our country and believe in the strength of America. I was going to wear my American Distress shirt, but it tells me that you think there's more upside left in the dollar until things change and we're not the leader in economic growth globally.
Yeah, I'm concerned. So I do think that, I began this year thinking that, like a lot of us thought. I mean, think about what happened from last March till December. Actually, the ironic thing to me is January 6th, when so many people were in Washington, D.C., that is when the dollar bottomed.
Yeah, people came into this year so bearish the dollar.
Yes, and so I couldn't help. So you think about where we were last Christmas. The dollar had been falling for 9 months,
right?
For good reason, and so yeah. So I was looking for a heavier dollar this year. But when I recognized that sort of the fashion, like where the ties are going to be thin or wide next year, I feel confident the ties will be wider next year because I just bought a bunch of thin ones. And
Yeah, well, I brought up, I let down my hemline. But I'm going to have to raise it now if you're that optimistic on the U.S. economy. So that's only when I'm cross-stressing, Mark. So anyway, yeah. So do you think this recovery is sustainable? Do we need more stimulus in the packages that are, not looking as likely for infrastructure spending while the taper is going on? Do we need those deals?
Yeah, I'm concerned that, so for me, I'm concerned of two big issues. So I'd say these are the two issues that keep me thinking about things at night. One is just the climate. I'm living on the coast of New Jersey, and the coast is sinking as ocean levels are going to be increasing. So I do think that climate change, whether it's how much of it's man-made, person-made, how much of it we can stop, what we can do about it, is worth a serious discussion. But I do think it is a major issue. And the other issue, I think, is the disparity of wealth and income in the United States, but in other countries as well. But in the short run, what concerns me the most is that Fed policy, so the Federal Reserve monetary policy and fiscal policy, typically we want them to be going counter-cyclical. When the private sector is not there, we want the central bank to step in or the federal government to step in. But now, I think that we're past the peak of the U.S. economy. A lot of that stimulus, fiscal stimulus is wearing off. And I suspect that many of our families are the same way. We had some pent up demand, long time since going to a baseball game or a concert or a bar or a restaurant or meeting with our friends. But we've been doing that for the last 6 months or so. A lot of that pent up demand is exhausted already. And the other thing that sort of troubles me, and it's not the scientific fact, but it does seem to be a good relationship. In the past 3 business downturns in the U.S., oil prices doubled before the downturn. And I'm not talking about going back to last April when oil prices were negative, which is still mind-boggling to me.
Yeah.
But
I thought I was in a Rod Serling Twilight Zone episode.
Right. And since the election last November, oil prices have more than doubled. I think this is a big headwind for the economy. And so what I'm concerned about is monetary and fiscal policy, rather than be counter-cyclical, becomes pro-cyclical. The Federal Reserve is going to be tapering and then I think raising interest rates at least once next year, even as the economy slows down. Similarly, fiscal policy. It's not going to be it's going to be still a large deficit, but much less expansionary than it has been. So that's what concerns me, is that we're going to take away the punch bowl, which seems to me makes sense, but as the economy weakens. And that's why I think that for me, the issue for the dollar is going to be, once again, as the U.S. economy slows down, the old twin deficits. Most countries have budget deficits, but few large countries have trade deficits. And the U.S. has, for all practical purposes, record trade deficits.
Okay, well, let me ask you this, since you're bringing debt up. We only got a little Band-Aid for the debt limit. And, though as acrimonious as it is in Washington, people like Lindsey Graham were upset with McConnell that he blinked and did this deal. Do you think that there's a possibility that we see a default in early December? And what would the reaction be in the Forex market?
Yeah, so I think you're right that, it's sort of like a strange dance that the US goes through every couple of years. And it really grows out of our presidential system. Because in like Europe or in Japan, where the prime minister is a prime minister, that is among the people who would be in our House of Representatives,
Right.
they pick one to become the head of the executive branch. So in the US, we really pride ourselves on the check and balances. The ambition of the executive branch competes with the ambition of the legislative branch. But in Europe, they don't do that. They have the legislature and the executive more like are together. They're the same party that runs it. And so I think that this is partly a function of the US presidential system, but I think that the market really looks past it. I think the market recognizes that two things. One is that default is really unthinkable, and whichever party is seen to be responsible will be blamed if it happens. And in this case, I think that, when President Biden was a senator and when
I
Chuck
saw
Schumer,
that. I saw the clip where he voted against raising the debt ceiling.
Yes, this is just this is just American politics. It's sort of like, now that we've been working from home for a while and we can really we've been spending more time with our family, good thing. But I think that maybe all families are dysfunctional a little bit, and we only know it by looking at other families. And I think the same thing true with the US politics. Yeah, it's dysfunctional, but a lot of systems are. Germany had an election in late almost say 3 or 4 weeks ago, and they might not have a government until the end of the year.
Yeah.
And so I want to say, like maybe it's like Tolstoy, every family is unhappy in a different way, perhaps. But I think the market is looking beyond the debt ceiling. They know that at the very least, as the Democratic parliamentarian ruled, the Democrats themselves can lift the debt ceiling. They don't want to because they want the Republicans to share the ownership of it. And the Republicans don't want to do it because they know that once they pass the debt ceiling, the Democrats have another big spending bill coming back to them. And so I think this is just typical politics, but I do think that there's been some disruption in the bill market. So a lot of us don't really operate in the bill market. This is much more for like institutional money markets.
T-bills, still the safest place to be, isn't it? And there's a problem there.
Well, what happens is if you think that there is a chance, say even it's a 1 in 20 chance, 1 in 100 chance that something goes wrong in early December.
Yeah.
Then you don't want to be stuck with one of those T-bills. You'd rather have a T-bill after early December. And so you've been seeing this kind of skew, the T-bills, as they move the debt ceiling a little bit. But I don't think it's really a major thing. I think we're going to look past this. There'll be some kind of a resolution to this, hopefully before early December. But I think that the bigger picture really is about monetary policy and fiscal policy, less so about whether the government really defaults. If the government defaults, we have a bigger problem on our hands. And I would imagine the dollar would get hit right away. U.S. interest rates would jump. But remember, the same thing with what we're seeing with
the TED spread would probably work. Remember that spread, Mark? TED spread, T-bill, euro dollars.
Yep.
Yeah.
And but I guess what I'm concerned about is that, back in, I think it was 2017, the last time we really had this kind of drama, S&P cut the U.S. rating.
Right.
Not because we've defaulted, but just because the process is so messy.
Right.
So I don't think it speaks well of America that we have to go through this. But when I look at the big picture, I'll tell you what I'm thinking, and it's that I think it's the way other foreign officials are thinking. You look at something like predicted.com, predicted.org, where we can bet on political outcomes, unlike, say, betting on market developments. You can bet on political outcomes. And what is in the back of a lot of our minds is that these polls suggest that the Democrats are going to lose both houses of Congress next year in the 2022 midterm election. And this is important because if President Biden is going to have what I guess the media now calls a virtual summit, which sounds to me like a WebEx phone call or a Zoom call between Biden and Xi, they have a call, big deal. If I was another foreign leader, how much can Biden really speak for America when he might be a minority president?
Yeah, lame duck.
In about a year's time.
Yeah, in his first term, lame duck. Interesting. You brought up China, so I've asked this question to a few analysts, and I'm really interested in what you say. Now, I remember back in 2009 in the Great Recession, most of the narratives and commentary was, well, China really didn't get hurt by the housing crash, and they didn't own a lot of that paper, and they were still growing, and they were going to be an engine of growth besides what the Fed and the stimulus from us to drag us out and bring us back out of this recession. So, okay, if you really believed it and they were part of it, I have to ask the question with what China is doing and their regression of liberal economic policy and some of their problems with debt. If China could bring us out of a recession, and now their economy from back then is twice as big, 30% of GDP, I think was maybe 19 back then. Shouldn't we be worried about what's happening in China to possibly cause major financial ripples throughout the globe?
Yeah, Dan, I think you're right that, in the last several years, partly because you got two big forces, right? You got the rise of passive investment, and you've got the rise of these of the index creators like more MSCI and the FTSE have begun including giving a greater weight to China, whether it's the bond market or the stock market. So passive investors in global funds are sort of forced to buy more China. So it does seem to be true that from the capital channel, China is more integrated in the world economy. The
Right.
trade is still incredible. So there are the channels of contagion, but I'm not so worried about China in that respect. I think that for a couple of reasons. One, I do agree with you that China, it seems to me to be having we talk about a Cold War and sort of these images from the past, and I think one that fits China right now might be a type of cultural revolution.
Yeah.
Not just cracking down on businesses, which I mean, in some ways, the U.S., Europe, China, we're wrestling with the same issues. How to tame, what to do with these large internet companies, which seem to be very powerful.
Yeah.
Secondly, what do we do about the disparity of wealth and income? Thirdly, there's excesses like antitrust, for example, that the U.S. and Europe and China are trying to address. But still, I think that China has gone much further. I mean, they're telling people how many children to have. They lifted the one-child policy, and now they say women can have 3 children. And you know what the implication of that is going to be, and we're already seeing it. It's going to be to discourage abortions, sort of like Texas, but writ large. And they're saying how long young people, say minors, can play video games. They're really so they're not just challenging businesses, but they're challenging even the family as a source of authority about these things. Why should the government be telling, sort of a typical American attitude, why should the government tell me how long my kids can play the video game for? That's my responsibility. Right. But so I think China's going through a larger transformation here, and I think that President Xi is overseeing it. I think he's fully conscious of what he's doing. It's not like accidental. Right. He sees that a lot of the reforms that China's had have been excessive, and a lot of these reforms he links to Deng Xiaoping from the late 70s, who, no coincidence, had exiled President Xi's father at an earlier stage in Chinese history. So there's a lot of drama and a lot of angst, pathos going on here. But I think that, to me, that one of the interesting elements with China, and I watched this, the NASDAQ Golden Dragon, which is an index of Chinese companies that trade in the U.S. And so on one hand, we've got China doing these, it's a bad actor, right? There's no doubt about that, especially from, say, not just an American perspective, but even, say, almost from the world's perspective, in the sense that China is very isolated as far as countries that want to be like China, want to support China. But at the same time, I think that that a lot of that's being blown out of proportion. And this golden index, I think, is really the test. Will people vote their politics and their ideology, or will they trade based on the profitability? And what I've seen happen is people seem to me to be buying the pullback in Chinese stocks.
Yeah.
So that tells me that ultimately,
that's a good point. Yeah.
Greed is going to outweigh fear when it comes to China, when it comes to our dealing with China and as investors.
And you know what, Mark, I was thinking about this, that G will do everything he can to make things look good into the Olympics in February, because there's a lot of pride, pride and honor and face. It's very important in China. And so the Olympics are important, and China's going to look great in February.
Yeah, I think one of the things to be watching for in this, and I know a lot of your viewers, like a lot of people I know, trade in the crypto space, and the Olympics are going to be where China has been suggesting it's going to launch.
Oh, that's right.
It's a digital RMB, so it'll be the first large country to do so. And what's interesting too about these Olympics is that they're not allowing foreign spectators, sort of like what Japan did, partly because of COVID. And so they'll even be able to have a more a sort of a better environment to test the digital RMB.
Very interesting. I didn't know that, Mark. Every time I talk to you, I learn. I want to wrap it with, give me your best guess for Euro going into the first quarter before things start to weaken here.
Yeah, so I'm kind of frustrated with the Euro. But right now,
well, something you have conviction about.
Right now, I probably think that my strongest conviction probably is the Canadian dollar. And the reason I like the Canadian dollar is I like it for fundamental reasons and technical reasons. The big driver here, I think, is Canada is ahead of the US. It's going to raise rates probably the middle of next year. But what I look at, and this is sort of one of my little go-to sort of rules of thumb, if you will. What I'm looking for are countries that have a certain policy mix. I want to see a country that has tighter monetary policy, but loose fiscal policy. That's what Reagan and Volcker had. That's what Germany had when the Berlin Wall fell. That's what the US had in the last part of Trump's years.
Okay.
And that's what Canada's going to have. As Prime Minister Trudeau ran for re-election, he promised a lot of spending.
Yes.
And the Bank of Canada has been signaling that they use code words. They say something to the effect, we're going to have our output gap. That is, we're going to be growing to our potential around the middle of next year. When people like me hear output gap close, we know that means interest rate hike. And so the market has taken short-term Canadian rates. So they don't have a euro-dollar contract or a short sterling contract like the UK does, but they're 3-month contract banker acceptances.
Okay.
So they have a futures contract on that. So when you're talking about the TED spread, we used to call it the bed spread, BAs against euro dollars.
Okay.
And so anyways, the point is really that Canada is going to tighten policy, monetary policy, expand fiscal policy. And the pattern that I've been watching in the Canadian dollar, so the Canadian dollar, US dollar made multi-year lows back in, I think, June 1st. It subsequently has, the US dollar has bounced. And in the last couple of weeks or so, the Canadian dollar has begun strengthening. I'm looking at a head and shoulders pattern in that Canadian dollar. And that projects to me, you can see it sort of
right here.
There it goes. You can see it there. The most recent part of that sort of rounding out part. And so for me, that objective is about 123. And I think we get down to 123, and then we'll be doing like as you did, this big retracement of the bounce the US dollar had. And so I could see the Canadian dollar being down towards 122 towards the end of this year, early next year.
Okay. All right. And then maybe from there, Mark, we get something like this, as if the Canadian economy begins to underperform the US, or we begin to weaken, with what you're talking about, a lot of the stimulus wearing off, and the Fed, not being friendly. So, okay, Mark is bullish. He likes Canada. And so don't go to Vancouver and trade with those Barracudas or Toronto. Stay here in the States, Mark. And I want to thank you for your time. And God, we covered a lot of ground, and I really appreciate your, being able to talk to you and learn from you every time we do this. So my trading warrior brother, Marc Chandler, everybody. And you could follow him on Twitter at Mark Making Sense, and that's sense with an S. And you could follow him on go to his website. And He's now the chief market strategist for Bannockburn Global Forex. And why don't we just quickly say that Mark has developed a new currency index, which isn't as heavily weighted in the euro. You want to just describe that new index that you put together, Mark?
Yeah, sure. So I'm sort of thinking that the world is coming apart at the seams. Nationalism is rising, and yet I want to be able to look at the forest instead of the trees. So what I did was I came up with working with Bloomberg, came up with a GDP weighted currency index. And the dollar makes up about 30% of it. China is second, and then the euro. And what's interesting, I think, is that out of the top 12 economies, half of them are emerging markets, half of them are developed economies. And so the index is really much more representative, I think, of what of the way the world really looks, as opposed to say, I know we all trade the dollar index, we like it, it's liquid, but two of the U.S. top 4 trading partners aren't even in it. I'm not even sure what the dollar index represents these days, except it's a nice vehicle that we have to use.
Right. Well, people were always looking for alternatives because of that. So, people came up with different dollar index contracts, and very creative of you, Mark, and look forward to the next time we speak. I hope you have a great fall trading season, and that all your clients, you're making the right moves for their hedges, and helping them, get have transparency in their currency transactions. And Mark, we've known each other a long time. You're not just a guest, you're a friend. So thank you very much.
Well, thank you, and good luck to everybody. Besides being smart and quick, we also need to be lucky.
I'm not against luck. So all right, till we see each other again, good luck, Mark. Take it easy, buddy.
And you.
Okay, everyone, my trading warrior brother, Marc Chandler. Hope everyone enjoyed. Have a great weekend. Pay attention to what the dollar is doing short term. If you do the right thing today, tomorrow takes care of itself. And don't just count your pips, count your blessings. Adios. Thanks, Mark.
Thank you.